So we have seen, of course, Chinese policymakers trying to dampen what they see as exuberance in commodities prices, in particular steel and iron ore. Is this really an indication that we're over the peak now?
Well, certainly the market, I think, was priced to perfection, and clearly the data released yesterday indicated that we're not meeting those expectations at the moment. I mean, iron ore imports have certainly come off on a month-on-month basis, and that did, I suppose, just raise a little bit of concern. Although, when you look at it on a seasonal basis, it's actually holding up relatively well, and in fact recorded a very small sort of increase on a year-on-year basis. But as I said, price to perfection, and clearly, at $200 a tonne. To get even further upside, you needed those imports to be even stronger than they were. So, I think for me, it's clearly a lot of downside risk, particularly when you factor in, I suppose, that export rebate removal on steel. That could potentially reduce iron ore demand, considering that Chinese steel mills have been targeting international markets with their steel products in light of the broadening economic recovery in some of those other major regions. So if they aren't competitive on that international basis, then we could see steel production actually weaken in China.
When you look at inflation vulnerable commodity classes, say oil, agriculture, as well as copper, is there more downside risk, particularly if the taper risk becomes more real?
Yeah, well, it's a fine line. I mean, certainly, when you look back historically, periods of high inflation generally have gone hand in hand with fairly buoyant commodity markets, and in part that's a result because growth is very strong, and that's what's driving the demand. But if you do see, the central banks start to ratchet back some of those stimulus measures, then clearly that's going to weigh on sentiment in particular. But I do feel like that would be a minor setback in a sense, considering the strong growth it's being driven by.
Is that why we're seeing a little bit of downside pressure coming from China, because perhaps they're rolling back some of those stimulus measures? We continue to see their import demand being a little bit weaker than last year.
Yeah, I certainly am a little bit concerned about that. I think in the second half of the year, we expect to see particularly some of those fiscal stimulus measures start to ease, and that will be offset slightly by improvement in growth in regions such as the US and Europe. But considering China is obviously the biggest consumer of commodities, that will be, I think, a headwind for the markets.
So, Daniel, when should we also start to be concerned or start to focus on Iranian oil?
Yeah, look, I'm taking a relatively cautious view. I don't think discussions are going to lead to some sort of agreement in the very short term. But certainly, if you factor in potentially increases in OPEC output as well in the second half of the year, and certainly sustainably high prices inducing even further supply elsewhere, then it's something to certainly factor in, and I think that has brought some reality back to these prices at the moment.